following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 27th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes. I'm going to have to try to persevere through this nasty throat that I've got, and if the sound just doesn't come off good enough, then we'll go ahead and shut her down. But I'm going to do the best that I can for you on this magnificent Monday. Hope everyone had a great weekend out there. Mine, I had a tough Sunday out there. In any event, it is great to be with you here. I'm grateful for your presence here today, and I am here to serve you. So feel free to pick up that phone, dial on it at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Magical Monday. Of course, it is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 129 points at 17,439. Key level that we're going to be taking a look at inside the Dow needs to finish up about 30 points higher than where it's at right now in order to hold an important level of support. We'll take a look at that for sure. We got the S&P 500 back about 11 points, trading at 2,069. NASDAQ Composite off 43 at 5,045. Russell down about 11 points at 1,215. DAX finished down 291 points. The FTSE finished down 74 points. Gold's about up $11 right now. It's been pretty steady all through the evening, through the afternoon. So not a lot having changed here since the open. Silver's up 14 pennies. Light sweet crude right now is back 58 cents. Okay, so let's begin. We're going to take a look. We're going to take a look at both, as we always try to do, both the bullish and the bearish side of the trade out here. And let's start by taking a look at the Dow. Let me put this chart up here on my screen. And what's really key here with regard to the Dow is today what it's doing, it's testing a hammer candle out here. Now, this hammer candle that we're looking at, by the way, which occurred back here on July the 7th, that's when we saw the market go ahead and put its low in. Its most recent low. Inside the Dow, we actually had back-to-back hammer candles. You can see both July 6th and July 7th were hammer candles out there. Now, this one was more important than, let's say, the hammer candle that occurred up here on May 28th. And the reason that I say that is because we had this pattern here complete with an A to B equals CD to the downside. I don't have my drawing tool on right now, but you've seen this pattern. I'll draw it maybe on a different screen. But in any event, we did have a pattern completion out there. And with this hammer candle, you can see that's a low that's being tested as we speak right now. The actual bottom of that is 17,465.68. That's going to be a key number for you to write down on your pad of paper out here, because if price holds that level, then that's an indication that the market has found, whether it's found a bottom or not, it has absolutely found support out there. And so that's one thing that we're going to take a look at. What happens if it doesn't find support? You can take a look at the hammer candle. We'll go back and take a look at a number of them. Take a look at the one here from May 28th of 2015. Whenever you break a level of support, I don't care whether it's a hammer candle. People ask me, where do you get that expression? If you're long, you're wrong when you close below a hammer candle. Just a nice little rhyme, just like sell in May, go away. But the other side of that is the question is, where does it fall to? It always falls back to a level of support. In this case here, you're always looking at swing points as one of those levels. You can see when this hammer candle broke in May 28th, price fell right back to its previous swing points out there. Now, in this case here, you can see that if we close below your previous swing point inside the Dow is back on February 2nd. So that says the range is somewhere between 17,050 to about 17,364. Somewhere inside that swing point is where you would expect price to continue to move down to if you get a close below that hammer candle. As I say, if you don't, then we know that price has found a potential bottom out there. As we fast forward actually we fast reverse it here just to show you other hammer candles. Hammer candles can be tested, just like the one back here, September 11th, 2014. You can see it was tested for a couple days, went ahead and moved higher. Looks like a little shooting star up there as well. But what's most important is for you to see what happens when price moves below those hammer candles. It falls back down to support. In fact, back here in the October, remember the October, the Ebola low out there, price fell below support. Actually made A to B equals CD to the downside as well on the way down there inside of the Dow. Here's another hammer candle to be paying attention to back in June of 2014. So the real key here, you can see it pulled right back to the set of swing points back here in May. That way, what you know is you don't have to get overly bearish, you don't have to get overly bullish. What you want to be able to do, no matter what you're doing, trading long side or to the short side, is you want to make sure that you understand what your different targets are out here. So you can see the importance of these hammer candles as I go ahead and I pull this Dow chart back. You can see this hammer candle back here in March of 2012. Price went ahead, closed below it. Price came where? Back to its set of swing points out there. So, and we can keep going back and back and back, and you can get that feel as to what it means when the price closes below a hammer candle. So that is on the Dow. Now, as you may recall, inside of the markets here, we had hammer candles all across the board. What I mean by across the board is we had them inside the S&P 500. Let's take a look at the S&P 500 out here. And as we pull that up, it's hammer candle. You can see prices is trading inside it. So we've only made a 0.786 retracement inside the S&P 500. So here's how you would take a look at the trade. At a 0.618 or 0.786 retracement level of anything, that's where you can find a change in trend. You can see maybe it's A to B equals CD to the upside, to the downside out here. So price inside the S&P 500 has gotten down to the 2063 level. If the Dow finishes up above its hammer candle low, it will have found support. That would also suggest that the S&P will have found support here at the 0.786 retracement level. If the VIX index closes somewhere around where it's at, or more than 10% one-day rate of change as it is right now, then that says that tomorrow you're going to see a bounce. You know, how high is that bounce? A bounce or bottom? And that's what you're going to say. That's what you're going to see. And how accurately can I make that statement? Well, with a 90% degree of accuracy out there. Now, I don't know how the market is going to close at 4 o'clock today, and it is going to be all about the close out here. But we don't have the same failure in the S&P 500 that we do inside of the we don't have a failure yet inside of the Dow, but we don't have that hammer candle under pressure inside of the S&P 500. So it's made the 0.786 retracement. We'll see how the market closes here. If we take a look at the NASDAQ composite, it too had made a hammer candle back on July the 7th. As we pull that back, we're nowhere even near that candle session. The high of that was 5,001. And you've so far seen a low today of about 5,033. So that is nowhere near intact of really creating any kind of a problem inside of it. NASDAQ composite, now if we switch over real quickly and take a look at the summation index for the NASDAQ composite, what we can see is just as that hammer candle was forming, it took really the following trading session on July the 8th. You can see that the NASDAQ, we take a look at this price oscillator, got down to that minus 65 range out there. And that is a level of a market that is oversold. And the NASDAQ composite tends to really bounce off of that level. I can't tell you why. I just know that it does. And you need to know that it does, too, so that you can prepare for your trading out here. Now, that being said, with regard to the NASDAQ composite, considering the highs that we were at just 5 trading sessions ago to where we're at, in order for the price oscillator to get pushed down that far, that fast, that's actually pretty cool. It's actually pretty cool from the bullish side, not from the bearish side out here. Because if you take a look at this from the low to the high, what you're going to see, just like we saw inside of the S&P 500, let me go ahead and make this a little bit easier for you to read. Let me turn off those expansions because they're not really accurate there. As we take a look at it, what you can see is it's basically made about a 0.618 retracement. It hasn't hit it exactly, but close enough for our work. 5,033 is the low. 5,028.17 happens to be the number that would be the 0.618 retracement level out there. Again, I'll come back and say the Dow is going to be one of the keys, because if we see a rejection of that hammer candle, meaning closing above, then all of these other indicators that we're taking a look at suggest bounce or bottom out there. And there's enough, and I don't know which one it is just yet, quite frankly. But let me go back and let me kind of switch back through a couple of charts here. But that at least gives you the feel Let's take a look at the NYSE. Because on the NYSE, let's take a look at it. It also has a hammer candle, which has not been tested thus far. It is also July 7th. July 7th, really key date for you to be paying attention to. The low there, 10,631.52 is the number. The actual intra-session low so far has been 10,642. So we have not tested it. We have not rejected it. There is something, though, that is a little bit more bearish inside the NYSE, and we'll go take a look at that in a moment as well. But what we can see here, first thing, we take a look at that price oscillator. As we speak right now at 1:15 in the afternoon, we're down below the 150 level. We're actually minus 176 out here. And you can see throughout 2015, you get down to these levels, they typically mark some pretty good bottoms out here. Now, we saw that level get hit back on June 29th, and we saw about a 3-day bounce, and price went ahead and moved lower. Of course, that moved lower, and it created a divergence there where we saw rising price oscillator, and we saw a lower price moving down. That hammer candle then on July 7th was the key out here. So you can see you start to get down the NYSE is also in an oversold territory. Take a look at its price oscillator out there. Has not taken out the hammer candle. That is more bullish than it is bearish out there. The Dow, even the Dow here, if you take a look at its price oscillator, you can see it's into the extreme. We haven't been this oversold inside of the Dow since March of 2015 out here. So again, 17,465, 68, I think is going to be a real key number. Now, there's not a lot of people that put a lot of weight in 30 stocks out there. I just took a look at a historical price pattern with you, a price chart, take a look at all those other hammer candles out there. And I think that they are I think they pretty much speak for themselves with regard to what it is that we can expect, anticipate at least, and that 17,465, 68 being a real key level out here. There is a hammer candle that did fail. That hammer candle is, I don't know if I've got the index up here or not. Let me see. I do not, but let's go ahead and put it up here. And that's in the semiconductors, dollar sign. So that didn't work out real well, did it? Let's see. Let me see if this pulls it up here. There we go. Now, on July 7th, it too formed a hammer candle. Was right here. It only took a couple of days for price to get below that on July 9th. So certainly inside the semiconductors, they've got problems in River City out here. What is a semiconductor index doing as we speak right now? It's really right back into an area of support. Let me go ahead and turn off some of these market profiles out here. Let me just turn that off for a moment. There we go. And we'll get a little bit of a cleaner chart for you to look at. And we can see that the semiconductor index out here is pulled right back into support. Now, support, what I'm talking about support is we've got this nice little gap up, this little sign of strength that takes you back to October 31st, 2014. October 31st, 2014, boy, that's when the finance ministers in Japan said, hey, buy anything and buy everything out there. Look, what we know is gaps are your friends, and when gaps get tested, and this is right now the second test of that gap today is any close above 635.72. Maybe that stops the free fall in the semiconductor. 622.08. It's not out of the question for that to be tested as well. This is Steve Rhodes. Even though you may not sound like it, believe it or not, it is. We'll be right back, folks.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 147. S&P is down 13. Now, the one indice here that we didn't take a look at was the NDX 100. So let me show you something here. This is the bear side of the NDX. If you take a look at now, what we know about the NDX 100 is a couple of different things. First, we had a nice consolidation pattern that was in place. We know it was a consolidation because we saw, a test of these highs out here. Oftentimes people refer to these as double tops or triple tops, and they're right with regard to the topping pattern, but they're not right with regard to the bottoming piece of a double top or triple top. In order for that to truly be a pattern, that's why a double top or triple top can turn into a consolidation, and that is exactly what happened here at the NDX 100. How do we know that? We know that because price never broke out the bottom. The bottom on that first top here would have been the May 6th low. In fact, that May 6th low was tested with that hammer candle inside the NDX 100 on July the 7th. And that's what set up the consolidation. Now, typically when you break a consolidation pattern, as the NDX did on July 16th, then you can expect a move equal to or greater than the actual consolidation. That most certainly did not occur here. At least it has not occurred yet. And just a simple measurement. Whoops. That didn't work real well, did it? But just if I can move this up here, you can see there's basically your measured move here, which would have taken you into about the 47 something area, 47.75 or so is what we would call it out there. Now, it's not unusual for price to go ahead and pull back and test the top of the consolidation as it did on Friday. But the reality is today it went ahead and broke back through that level. You break back through a consolidation, says it was a false breakout. There is no other way to call it until price gets above that. But what's more dangerous than that is not the mere fact that price came back into the consolidation range today. What's really more bearish about this pattern here is the fact that if you take a look at the day from July 17th, the high of that was 45.47.18, and the low of the following session, 45.58. You can see that gap there. Well, there's actually a very small gap. It's very hard to see, but if you take a look at the low from Friday, Friday's low 45.52.40. Today's high 45.51.99. Right? You're talking about what 42 cents, 41 cents, something like that out here. You've got a gap. This here inside the NQ at its all-time high is got an island reversal pattern out there. So that's both bullish and bearish. It's bearish. The bullish side is if this pattern ever fails. And that pattern failing would be getting above the 46.94 level out there. You do that, you probably have an A to B equals C to the upside, as well as that consolidation pattern. But right now, the pattern inside the NDX 100 is absolutely bearish, both from the standpoint its prices come back into consolidation, and now too, you've got a island reversal top inside of it out there. And you don't see a lot of them, but we are seeing more than you might normally. There's an island top inside the XLK. That's the #1 sector inside the S&P 500. That formed right out here between the 17th, 20th, and 21st. Actually occurred the day before and the day after that. So it was the 16th through the 22nd out there. That was up at the highs out there. So you've got a nice little island top pattern. Again, both on the bearish. It's bearish right now because that's what's activated. Bullish if we see any kind of move into it and over. That's on the XLK. So that takes care of. Now, you won't see that same pattern inside the Qs. The Qs actually, and that's why I wanted to show you the NDX. If you take a look at the low of Friday inside the Qs, you're going to get to 110.93 and the high right now of 110.95 intersession. So it closed that gap. That island reversal top would not show inside of the QQQ ETF. Which one is the one that's more important? It's actually the index. The Qs themselves, you're going to see adjustments for fees, dividends, and so forth. So to my opinion, it's the indice that is the one that is the most important out there. So you're going to want to keep an eye on that as well. Now, what are the things that could take this market higher? Well, one of those things is going to be the VIX index. VIX index right now as we speak, it's up well above the 50-day exponential moving average, which is 1432. You've got the VIX priced out at 1601. 1601 is a 16% move in one single day out there. I can tell you with, as I said, 90% certainty that if this is how the market closes, even with a close below the hammer candle on the Dow, you've got to expect a bounce. So do not, if you see that, do not be surprised if you were to come in tomorrow and you see that the futures are up. What happens at that point in time, then we just have to take a look at other patterns out there. So the VIX being as strong as it is today is actually giving you a signal that, okay, there's a bounce that is coming out there, and that will help you from being able to handle your shorter term, your intermediate term trades out there. Now, I did mention as well, so, being able to find both the bullish and the bearish side of things out here. We took a look at the NDX 100. That most certainly is bearish. When we get back from this break, we're going to go take a look at the trend that has been broken here inside the NYSE. That says price could pull back quite a ways out here. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow off 149, S&P down 12. So I mentioned that at the close last Friday, what took place out here is inside the New York Stock Exchange. Here's a weekly chart for the New York Stock Exchange, and just with two simple trend lines that are on it. Now, the important trend line for us to be taking a look at is one off of the October 2011 lows out there. Basically, your touch points are going to be October 2014 level. It's also going to take you right down into the June 2012 area. And we can see, as I just blow this screen up on my chart here for you, we can see that as we came into the close on Friday, it was a close just below that trend line. Not a good thing. When you break one trend, you can easily move down to the next trend. Well, the next trend line inside of the New York Stock Exchange is really two that you would pay attention to. The first one is going to be the actual consolidation breakout inside the NYSE. That's 10,387.16. Now, I'm not taking a look at primary trading ranges or anything at this stage here, horizontal trading ranges just yet. But if we just take a look at trend lines, we basically have our diagonal area of trend line support, and we've got our horizontal level, and that's a horizontal level here is 10,387. Now, this week, the New York Stock Exchange is going to do everything it can to try to get back inside that trend. But if it doesn't, expect price to pull back into the 10,387 level. And if it is able to get below that, that then brings the other trend line. That's the trend line coming off of the 2009 lows, the March 2009 low. And then your next touch point, your only touch point out here is going to be October of 2011. Just like you and I took a look at the hammer candle. And when you break a level of support, where does it fall to? When you break a trend line, make sure when you're using trend lines out there, they're great tools, that where price falls to, don't get caught up into trying to figure out that it's going to fall into something else out here. Get back to the last trend. Get to the next trend out there. You know, don't start looking at, don't start mixing up different tools. Don't start mixing up breaking of a trend line and it's going to fall back to a swing point or something along those lines. Look at trends, because that's where price will typically, when you break one trend, you're going to pull back to the next trend line. That's what your target should be, and that's how you would take a look at it. Now, with regard to the other indices out here, let me see here. With regard to the other indices, we don't have that same setup out here. If we take a look at the S&P 500, I don't need the moving average. You can see we're nowhere near that trend. So it's in much better shape than the New York Stock Exchange. If we take a look here at, give me a moment here, turn that off. If we take a look at the Dow, we're going to see inside the Dow, we're really right at that trend, right? Take a look at that. So here, well, we're a little bit above the that trend line support. So breaking that hammer, again, the hammer says we go down and we take a look at the next set of swing points. That's the February area. We haven't broken a trend line here. If we do break this trend line inside of the Dow, then I'll come back and I'll draw on what the next trend line is for you. But at this stage here, even the Dow is still, you know, a little bit stronger than the NYSE with regard to its trend out there. And the composite, I don't know if we did this yet, but here's the composite. We're nowhere near getting back to its same trend line out there. Okay, so that takes care of that. Let's take, so, you know, we've got the VIX index. I mentioned the VIX index to you folks out there. And if we see that close where it's at, you know, we've got a better than 90% chance of seeing at least a bounce in recession tomorrow. But where else is it that the bottom could come, or where else is it? We took a look at overbought conditions inside of the price oscillator, so inside the summation index for the New York Stock Exchange, the Nasdaq Composite, and the Dow. That's a place where you can see bounces come from. You know, let's get focused on the charts and what they show us and what patterns they have in the past versus get too caught up in everything else that's out there. If we take a look at that, well, here's what I was going to show you first is if we take a look at the Euro Japanese yen. Speaking of trend line, so this was how I was going to just kind of nicely smooth right on into that. If we take a look at trend lines, you can see that inside the Euro Japanese yen today, it's breaking a trend line. It's breaking a downtrend line. Now, that's a downtrend line coming off of the swing here from June 22nd, a little shooting star on July 13th, and we can see as we speak right now, prices above that trend. So we have price breaking a downtrend inside the Euro-Japanese yen, and we can see that it's also made a rising bottoms pattern out here. So that really takes us to this chart. You and I took a look at this on Friday out here, and on Friday, one of the things that we noticed was the Euro-Japanese yen was making higher lows with the market making lower lows. You can go back and take a look at this chart out here. You heard it first here. I'm pretty certain that you heard it first here because I'm the one that's been tracking this for years now, because that's how long this carry trade has been in place. And when you see divergences, such as the ones that are on my screen here, where the euro moves in a different direction than the market corrects itself back to the direction of the euro. And at this stage here, we've got those higher bottoms. We've got now this chart here for you to take a look at. And so if you're wondering how is it, where is it, that it can come from, well, it's a liquidity issue. That's all it is. It's how many dollars are chasing available stocks and ETFs inside the marketplace out here. And this is a liquidity indicator. And the Euro-Japanese yen is saying that there is plenty of liquidity inside of the marketplace. Let's go out to California to our man, Garo. Garo, thanks for calling. Thanks for holding. How are you doing today?
Very good. And you, sir?
I'm doing fine. Thanks. Thank you for asking. Are you still trading oil?
Yes, sir.
Good.
SEO is my SEO is my hero. So far, until then it collapses, noses down. Then I start to trade UCO. So as long as SEO is keep going up, I'm just follow that SEO. Today was a very good day. Very, very good.
That's good. Glad to hear that.
Yes, sir.
You called because you have an interest in Apple. Tell us
Yes,
what you're
sir.
doing, how it can help you there.
Yeah. On 9th of July, it was Thursday, I called you when Apple was keep going down. You see that big candle that is very close to 200 days. I was shorting it big time.
Got
and
it.
then we talked about that, that it may cross that 200 days, or we're going to stop there and turn around. Then it turned around the next day. And
Oh,
it
sure,
went
sure,
up.
sure. Right.
Yeah. It went up and up and up, and then they say, yeah, the watch is going to come out, this is going to come out. It was all a bunch of yelling of crowd. And then it turned down. Now it's coming very close again to 200 days. We talked about that gap, about 114, 115. I said, I'm gonna wait and buy that. I'm gonna load it up on 114, 115, and from there on, Apple is gonna go up, and we'll never ever see that 114 and 115 again. Do you think that will come down to 114?
Well, what you've got going for you to the downside in Apple is, and I mentioned this in the we took a look at the NDX 100, the one of the other stocks I think out there. Maybe it was just Apple, but you've got what you have here basically at near all-time highs inside Apple is you've got an island reversal top. So the trading days on July 20th and July 21st, where we had that gap up from that July 17th area, where you talked about the watch and the crowd. When it gapped down with volume on July 22nd, it left that very, very bearish pattern. What that says to us is that price should at least fall down, and because we're trading inside that July 9th level, it should get down and test the bottom of that, which is 119. It is absolutely a very bearish pattern out here, the island top. Apple has done it before in its past. I don't know how quickly I can find another island top out here. I probably have to do it maybe during a break or something. But it did have a island top at least once before, and I would imagine that it's out there. But to get back to your question, it should fall back. You've got a very bearish pattern out there, and therefore it says it should test that swing point, which is the 200-day moving average. And then I don't see any reason at this stage of the game for it to not eventually get back and test that 112 to 115 area, that gap there. And then I'd have to say that what you're looking at is you're going to really kind of look at volume at that stage of the game. Because if it's coming back and it's testing 115.31, less than 146 million shares, and holds that area, then maybe what you just said comes to fruition, which it takes off from there. The other area of support, your second level of support, would be 112.48, again with a test of less than 146 million. But if it tests that 112 area, you really like to see the test on less than 95 million shares out there. So that's that's my read on Apple. It left behind in its tracks, a very bearish pattern out here, and I don't see anything here that suggests at this stage of the game that it won't continue to move lower to at least test that 200-day area.
Unless it makes a double bottom at that 200-day, and from there on it goes flat for about a week or two, and then it starts to take off from there.
Well, then what I would say is what you're dealing with here is if you take a look at that possible pattern where it would get down, and even if it, I think, Garo, that even if gets down and tests that 115 area, you're more likely at this stage of the game, more looking like a consolidation pattern. It's probably gonna be quite a bit of work for Apple to take out that 133 area. I mean, what your thoughts on your thoughts on if it gets back to the 115 area and holds as support and then takes off? Why are you thinking that this thing will be totally off to the races and take out the old highs?
I don't. I mean, it's true. It's a hunch. I mean, whenever I look at Apple, I look at that 114. I don't know why. I don't have no good answer for you, sir. But
that's okay. That's okay. Yeah.
This is a hunch from experience. That's all. That's all.
Hey,
I'm not.
experience is a good thing. So, I think you've got this thing pegged pretty well with regard to the different levels of support that it could find. Obviously with Apple being such a huge weighting inside
Yes.
the S&P 500 just via its weighting inside the XLK and obviously the Qs out here, it is important. It's an important stock, bellwether stock to keep watching.
Yes. Thank you, sir. Thank you for
bet.
your time and listening to me. I appreciate it. Thank you, sir. Okay,
Thanks
bye-bye.
for calling. That was Garo in California, and that was a view of taking a look at Apple. We had a request to go inside the Tigers Den to take a look at GDX and AEM. So, again, back on the Euro Japanese yen, don't disregard that with regard to, Garo mentioned intuition, hunch, which is really an experience, which is really important to have out there. Well, with regard to experience, you and I have the experience of the Euro Japanese yen and its meaning with regard to the stock markets out here and the impact that it has on that. So, we can visually see that experience. With regard to, there was a question about taking a look at I'm looking for this other chart out here. I know I keep promising you that one of these days I'm going to clean this up. Which the only reason why I haven't is because it requires a lot of work, I suppose, and I forget to do it. But if I can find my gold chart out here, right here. Here's the chart, because the question is, what do I think about the GDX? What do I think about AEM? Which really also means, as we talked about on Friday, what do I think about gold? We can see here with regard to the dollar index. Now, this dollar index that you're looking at the bottom of my screen is inverted. So when you see the dollar index, the blue line moving higher, it means that the U.S. dollar index is actually getting weaker out here. So it's inverted. And I've done that. I've done the inversion just simply to be able to go ahead and try to track the directional movement inside gold and the gold miner vectors ETF out here. So we can see we've got a divergence. In the past, just like you and I took a look at that divergence inside of the euro yen and the ES mini and the NQ out here, in the past, more times than not, we see where that divergence inside the US dollar index and gold and the GDX turns into a bottom, at least a viable bottom out here. So the message with regard to this chart here, just as we took a look at, I believe might have been, who called on that on Friday now. But we went through and took a look at that. That still is in play. So that's in play as we speak right now. As we switch back over and take a look at the GDX specifically, my thoughts on the GDX was that, I don't see it on my screen here. I'm going to just put it up here in the chart, GDX. My thoughts were back then, and they still are the same, is that you are better off looking for individual plays inside of the gold market as opposed to the actual GDX. We took a look at the top 5 or 6 weightings inside of the GDX. We'll go take a look at a couple of them as well. And they weren't showing any kind of reversals out there. Some individual stocks were. The GDX and its weighting, I don't recall that it was, but let's go take a look at some of those anyways. So inside the gold vector miners ETF out here, there is no bullish pattern. You have a little piercing candle on Friday. We're not seeing any additional follow through as we speak right now. Now look, if you wake up tomorrow morning, gold is somehow taken off to the upside and the GDX opens above 1477, then you got your trigger without a doubt. Because that would set up an island bottom pattern out there. We just were taking a look at island top reversals. Well, inside the GDX, you could have an island bottom pattern reversal out there. So we get back, we'll go take a look at AEM for Mike in the Tigers Den. The Dow's off 134, S&P down 11. Be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Look back, folks, just to go take a look at Garo's intuition, his experience out here, we're take a look at Apple. And as we take a look at Apple, and just so that we know that that island top may not really be the death of Apple out here, but if you come back, I told you I remembered a number of islands inside of Apple. If you come back into October 14th, 17th, and 18th, 2011, you're going to see an island top out here inside of Apple. And voila, price went back and it held. It went and tested the right to the 200-day exponential moving average, which would have been 51.92. The low was 51.90. And then, of course, price went ahead and it was able to take out the highs of that island top out there. In fact, it gapped up over them back on the trading day with some conviction behind it, January 25th, 2012. You'll see also Apple here had a nice little island bottom pattern out here. That was the days of July 25th, 26th, and 27th. Very bullish pattern, just like the opposite is bearish out here. There was an island top out here that occurred below the 200-day exponential moving average. That was back on January 2nd and 3rd in 2013. Went ahead and looks like made an A to B equals CD to the downside out there. But you can see the bearishness involved with that. But that was an island top made below the 200-day exponential moving average. Another island bottom back here inside Apple. This one took a while to build. It was between January 28th and February 6th out there. That created a significant low for Apple. That was down in the $70 price range. That was back in 2014. Of course, that is the converted price out there. So we fast forward, you've got that island top in Apple as we speak right now. Pretty good chance that 200-day does get hit, which right now is priced out at 119.28. With regard to going and taking a look at AEM, so, I gave you my view on gold, and so far everything suggests that gold is in the process of finding a bottom out here. If we take a look at AEM is a much better looking individual stock chart pattern versus the GDX. And the reason that I say that, the reason that Stevie says that is because on Friday, at least, what you had here was you had a better reversal signal. Now, the GDX had a piercing candle, which isn't so bad, but it is not as good as a key reversal session. And that's what we had inside of Agnico Eagle, AEM. Now, unfortunately, it was also a high volume day. So you've got a high volume low out there inside of AEM. I'd have to go back and take a look at the weekly chart, monthly, just to see if it was testing something. I believe when we looked at stuff on Friday, things were being tested with high volume out there. Now, in the case of AEM, and this is just really all over the place, so it's just the opposite, right, where you've got everybody so pessimistic about the stock markets out here, and of course you've got everybody pessimistic about gold, and I saw all those articles, as did you, about the hedge funds being net short gold. I don't know where these writers get some of this crap from. And that's really what it is out there, because the reality is the stock chart that they showed, if you saw that chart out there and you went ahead and applied that to the stock price chart of gold, which they were really showing some COT data, but they don't really know how to use that stuff. You'd find that those lows out there and their curve really help to identify lows that gold is making out there. It was just, I saw it come across my phone at first. I think it was Saturday morning or something, and I shook my head, because I already done the work Friday afternoon for you folks, at least those folks in the den, at about 3:35, 3:40 when the CFTC data came out, which also shows that the market is in the process of making a bottom. Now, the cool thing here with regard to Agnico Eagle is if you can gap up above today's high, I'm assuming that it doesn't get back to the high today of 24.57 out there, then you've got your confirmation of at least a viable bottom inside AEM. And it would suggest that you probably get up to 30.37 out here. It's 200-day exponential moving average. Well, folks, I made it through the day out here. You've got your numbers to be paying attention to, and I hope you have a great day, and I'll look forward to seeing you come tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.